Sustainability is very key if we are to increase inclusion, if we are to increase, many people being able to access our services. Affordability, pricing of these services is a thing we watch and we track. And in our strategy, for example, at Centenary Bank, we aim to be one of the most affordable financial institutions. So every time we are pricing our services, we look at what competition is doing, we look at what is out there, and we set our prices accordingly, because we know it is a key pillar for financial inclusion. And finally, sustainability. And we will come back to that as well. As we do all this, are they going to be sustainable? Will people continue to access these things anytime, every time, whenever, wherever they need them? Sustainability. And because of sustainability, you saw the other graphs, how they are going up, meaning that we are building the capacity for sustainability and sustaining the services that we offer these customers. So those 4 pillars of financial inclusion, I thought could be things that you can also focus on as you increase your inclusion of people in the banking, rather in the insurance space. I wanted to talk about trust, because in banks, we know the commodity we sell is trust, which I'm sure even you should be the commodity that you are selling. If people don't trust you, if they don't trust us, they won't come to do business with us. So what are you doing to ensure that we build trust? For example, when you look at what the banks are doing now, and the regulator has done a very big job of ensuring that there is transparency. People need to understand, we were talking about how people would say, if they've been having a policy, an insurance policy, and you say that if you stop contributing, paying premium before 3 years, you lose everything. Now, to somebody, if he didn't understand that, he will label you as a thief, as somebody, who is there to take their money. But if you had explained that to him at the very start and he understood it, he will have made a decision either to buy that policy or not to, or to buy it and face the consequences if he fails to contribute the premiums along the way. So transparency is very key. And what we have now, we have what we call the KFDs, key fact document. Every time you open an account, you sign off that key fact document. That key fact document, it tells you all the terms, the things that you will be, and of course most people don't read it, but we need to be intentional in trying to explain all these terms so that people, that way you are building trust, because without trust there is no business. So building trust and confidence are very key, and I think there are things you need to put at the forefront of all your strategies, because that way you will have people buy into your business. And I'm glad, as again we heard about the trends, the way you've moved to almost 1% penetration of the GDP. I think it is a good trend, meaning that people are trusting you more. And now that you can do bank assurance with banks, again, it should be something that should add, to the confidence and trust that people, should have with your industry, with our industry, and that we're being able to continue, growing. Of course, you can see the pull-push strategy. We've been just pushing out products. We need to ensure that the people are coming to us because they know they are coming for good things. So a strategy that focuses on a pull rather than only push, I think will be a very good strategy, and which you need to pay quite a lot of attention to. The other thing, as we do financial inclusion, we've singled out certain segments that we know that probably previously were left out of this space. And we've singled out the youth, the women, the refugees, those specific segments that you need to design specific products for. Recently, you heard that we are now giving out the GROW loans for women enterprises alone. We have, for example, for the youth, if you came to Centenary Bank, if you have a one-day child, there's an account for that child. We call them the Cente Youth accounts. If somebody progresses to a school, we have what we call the Cente Evolution accounts for such a segment, with no fees, but enabling them to learn how to save. Then from center evolution, then you can go to other accounts that are given to the rest of the segments of the population. That way, trying to attract the youth, giving them products that not only will teach them the importance of saving and dealing with the banks, but also giving them the benefits of doing that. And that is the thing that probably you also, as an industry, need to be deliberately focusing on. What do you have for these special segments of the population? These, of course, we've seen technology, coming in quite aggressively. You saw how technology became very useful during the times of COVID, where there was less contact, but using technology, and we've seen quite a lot of adoption of technology. And as we do this, of course, there are challenges that come with it. Technology is now enabling us, as Protasio mentioned, to be able to sit wherever you are and transact on your phone. But as you transact on your phone, there are certain risks you face. Cyber security, is a big risk now. I'm sure you've been hearing of frauds, cyber frauds that are going on in the industry. All these things are a wake-up call for all of us, that as we continue to use technology, what attention have we given to systems that protect us from these risks? Cyber assurance now, for example, the regulator has made it mandatory for all financial institutions to have a position of a cyber assurance person sitting at Exco. As he sits at Exco, the boards every quarter when they meet, that should be a specific agenda item discussing cyber security. And I thought it was a very good move, because this risk is real and big. People can hit a bank within 20 minutes. They can siphon out 10 billion in just 20 minutes. So paying attention to IT security becomes very critical. Of course, IT comes with costs. It comes with ensuring that people have the competencies. And these are the areas that institutions have to invest into. How much have we invested in building competencies, capacities of the staff to run these IT systems? How much costs, like in my bank now, we are in the process of doing budgeting. But one of the quarrels and the wars I'm having with the IT guys are these big budgets they come up with. But sometimes they are inevitable. But they need to be interrogated, they need to be looked at, because they are big. If you look at the kind of money, the kind of money we spend in fighting cyber, frauds and security, it is quite a lot. But it is a worthwhile investment because we've taken on technology. And we need to be looking out for it very, very seriously. Legislation is increasing, and we've got some of these. For example, data protection is now very key, very critical. Actually, one of the requirements of the regulator now is to have an officer in charge of data protection under the compliance section. And every institution must have it, because you've had institutions that are fined for not looking after data or information of customers very well. And it can be big. And I think we've had a very big case in Nairobi, and I'm sure even here it will come. So the earlier we prepare to ensure that we've protected data of our customers, the better. Otherwise, the risks are high. Focusing on compliance. Compliance is a full-day job now. We have, every institution has a full section on compliance, sitting at Exco as well, and also looked at regularly by the board, to ensure that, because when you look at the things, the penalties that can come out of non-compliance, they can be big. They can be big and you can't stop them. So it is important that we invest in systems that will ensure that we are compliant with all the regulations. The regulator comes up with all regulations which are for the good of ensuring that everybody does what they should be doing, protecting the business and in the process also generating the trust that we talked about. Because as an industry, it needs to be trusted. And if there are no regulations, sometimes, if everybody does what they want, it may not be a good thing, and the process, the public won't trust us. So focusing on data protection, compliance, and risk management are key things, preoccupations that all of us need to be taken into account. Collaborations, I talked about collaborations. I think they are very important. We are now collaborating under bank assurance, for example. But we also, somebody will say that these mobile money companies are our competitors. But we look at them as partners, because we are collaborating with them. That's why you are able now to use your phone, pull money off your account, put it in a mobile wallet, and be able to withdraw it from my mobile money agent. So those collaborations are very important with fintechs. There is what we call linkage banking, because as a bank, our mission is to be out there with the ordinary Ugandans, many of them, but there are so many people we can't reach. And we are talking about financial inclusion. That's why we've deliberately taken what we call linkage banking. So we are identifying those small institutions that are out there, closer to the people, that can reach out very directly, like the SACCOs, the VSLAs, the MFIs, and be able to support them to ensure that we deliver on our objective of having as many people as possible included in the banking sector, which is a thing that as an industry, as insurance as an industry, should again, I think, also be looking at positively. Innovation is very important. Of course, banks have been accused of not being very innovative. I don't know what's going on with the insurance industry. Probably you may be better than us, but it is a thing that we need to inevitably and intentionally do. Being innovative, looking at changes in the needs of customers, working with the technology people to innovate, coming up with more efficient systems of delivery of service and so on. And this is the thing that we need to be deliberate about. Otherwise, you can talk about innovation, innovativeness, but if we don't actively and deliberately, intentionally go for it, yet it is necessary, I think it is important. When we are dealing with the systems, we are talking about these three things: the people, the processes, and technology. We've already talked about technology. It is important to focus on the processes, the efficiency of these processes, because people are interested in quick turnaround time of processing policies and so on, processing payments and so on. But most importantly, the people, because they are the ones who run, all of these systems. Focusing on the training, capacity building, focusing on systems that ensure that they are motivated, they are engaged, and so on, very critical. So those three things, we focus on them, and I think they are important for the industry to focus on them. I talked about responsible banking for sustainability. We are now talking about ESG. I'm sure you've heard about the environmental, governance, and the impact socially to our customers. It is something that we need to be deliberate about. Probably in the past, the focus was always on profits, bottom line. But now it goes beyond those numbers, because if you do profits today, you may not be able to get the profits tomorrow because you didn't care about the impact that your business is doing to your customers, the impact that your business is doing to the environment. Because we have one planet, we don't have another one. We need to protect it so that we continue to do business in that one planet that we have. That's why it is important to do responsible banking. And the same way we need, as insurance, as an industry, to be doing responsible insurance, because profit transcends mere numbers and should reflect lives that are transformed, communities uplifted, and the nation empowered. These things sound like they are for government, they are for the general public, but we are equally responsible as enterprises, as institutions that operate with these communities. And we all have to make a contribution. We all have to ensure that we contribute to sustainability of the environment, protection, society to be positively impacted, and so on. And it is something that as an industry needs to look at also. Climate change, again, going into environmental protection is a thing that we need to be focusing on, because, as we know, the challenges of poverty, unemployment, and inequality, these are things that we need to address head on. And some of the things we need to be focusing on is, ensuring that climate protection is doing what it should be doing in order to protect the environment. So in conclusion, financial institutions and insurance companies address financial matters and to address the triple goal challenges of poverty. What you are doing, you are ensuring that we are able to address the poverty, the inequality, and the unemployment that we have as an industry, and that's when we will be able to generate the trust that we want people to have with us to be able to do business with us as an industry. I want to thank you very much, and again, thank you for the opportunity to share. I'm hoping that we'll be able to continue getting similar opportunities as industries that deal with the financial matters. Thank you very much.
Well, that's in line with Uganda's insurance sector. Now, we know that as Uganda's financial ecosystem evolves, sectors once thought static under mounting pressure, that is to be in position to adapt. Now, the annual meeting of the Insurance Authority gathering, that is of Uganda's top insurance executives, centered on urgency of innovation within the insurance sector, a field that until recently has remained inaccessible for quite a huge number of Ugandans. Now, with Ugandan banks achieving unprecedented reach and inclusivity through mobile and agent banking, many are asking, can actually insurance undergo similar transformation? Of course, we're going to be exploring part of these particular discussions. Now, following what we've just been reviewing currently, insurance penetration in Uganda hovers below 1% of GDP, according to a 2023 report by the IRA, that is the Insurance Regulatory Authority. Now, this low rate reflects significant barriers to entries for everyday Ugandans, with most policies historically aimed at corporate clients or wealthy individuals. Now, we're going to be, of course, taking a look at aspects, the likes of motor vehicle insurance and comprehensive business policies, leaving lower income individuals and rural communities with a limited or no access to affordable coverage. Now, for Ugandans facing unpredictability of agriculture, talking about health risks and income instability, insurance is offering a promise of security that remains largely unfulfilled. However, if we take a look at this, it doesn't show that it has to be the case. A neighboring Kenya, for instance, saw a 30% increase in micro-insurance uptake. That is after integrating insurance products with M-Pesa and Kenya's largest mobile money platform. Now, by making micro-insurance available, that is through familiar and widely used channels, Kenyan insurers definitely reached a demographic that had been inaccessible through the traditional models. Now, agent banking success is with no doubt definitely a pivotal case for Uganda's case into the financial sector. Now, since the launch of agent banking in Uganda in 2018, banks have created a network of over 8,000 agents, and of course, we know that Centenary Bank alone reports that about 50% of its rural customers now access services through agents, sparking massive growth. Now, this wasn't the case, and some of these areas weren't reachable before. Now, the CEO of Centenary Bank emphasized this accessibility to his address to insurance executives, stressing that agent banking simplicity and reach have provided financial services to countless Ugandans who previously had no access. Now, banks' ability to overcome logistical, culture, and educational barriers by setting up mobile and agent-based options underscores the potential of insurance to do the same. Yet we know that insurance companies have not yet made such services available. Now, despite the widespread acknowledgement of the need that is to modernize insurance. Executives have cited the various challenges from regulatory hurdles to lack of technological infrastructure. Of course, unlike banks which benefit from established infrastructures, talking about agent banking networks, talking about insurance companies face unique regulatory and logistical hurdles. Now, many insurers lack the infrastructure to distribute policies at scale and cite high initial costs in setting up these mobile-based services. Now, there are also entrenched trust issues. For many Ugandans, insurance remains shrouded in complexity, with policies filled with dense legal language and clear terms. Now, the average Ugandan, the cost-benefit analysis of purchasing insurance often leads towards skepticism. Now, in the banking sector, trust was won through education and reliability, with the banks setting up mobile kiosks and hosting community events. That is to be able to explain their services. We see insurance companies could also follow a similar route, demystifying policies and using relatable language. Now, some Ugandans who use agent banking might actually find value in insurance if they get to understand what it offers and also trusting it. That is something key. Now, digital technology offers enormous potential to bridge gaps in the insurance market.
Taste of Uganda, yeah, the taste of Uganda, the taste of Uganda,
Are you a woman entrepreneur or a woman owning a business and looking for affordable financing to scale up your business? Look no further than the Grow Loan. Grow Loan targets female entrepreneurs nationwide. Key features include a minimum loan amount of 4 million and a maximum loan amount of 200 million shillings, a maximum interest rate not exceeding 10.5% per annum, a loan repayment period not exceeding 24 months. All Grow Loan borrowers must comply with the Grow Project environmental and social standards. Special incentives are available for borrowers that are refugees or from the refugee host communities, people living with disabilities, and women entrepreneurs from the underserved or minority groups. To apply, contact any of the 6 participating financial institutions. Contact us for more information or visit our website at www.grow.go.ug. The GROW loan is an intervention under the GROW project, a Government of Uganda project financed by the World Bank and implemented by the Ministry of Gender, Labour and Social Development and the Private Sector Foundation Uganda. GROW, generating growth opportunities and productivity for women enterprises.
Okuba omusinguzi oyine kuba stede nka Tiger. Konka korigura amashita na MTN Momo okusingura kworobi. Kozesa Momo app ningashi imata star emwe mukaga 5 star ishatu hash. Teka mu merchant code, teka mu muhendo gwesente, teka mu Momo pin, oshashuri. Congratulations! Emotoka yawe shemerirwe kandi watunga omugisha gwo kusingura mobile money na MTN Momo.
This is Jordan. When it comes to classwork, Jordan is magic. Jordan shines. Jordan makes his peers better. Jordan is a true leader. White Star Magic family. Be a leader. Be magic.
CADEP, it is the flagship program. It is the all-food system that exists for us to implement and make sure that all our citizens on the continent have access to affordable, safe, and available food.
It is difficult to talk about agricultural transformation when we have to rely extensively on extremely subsistence kind of economies. What we have been advocating is for countries to begin to look at agriculture more as a business.
Everything that has to do with agriculture is CADEP. Whether you're talking about trade, if you're talking about youth employment, you're talking about wealth creation, the post-harvest management issues, the land-related issues, bringing on board the private sector, private financing, investment, that all is talking about CADEP itself. So CADEP broadly is the whole spectrum of agricultural developments on the continent.
If you don't have this type of a specialized technical office, how do you address this problem? It's very important to have this type of agency.
Our work is basically to protect animal health, and protecting animal health ensures that we have good productivity, we protect public health, and also we ensure the food that gets to our consumers is safe. To do this, a major tool that we use are vaccines.
It has been assessed and found that based on the population of animals on the continent, about 90% of the meat on the table must have been treated one way or the other by vaccines certified by PANVAC. To put it lightly, is to say that without an organization like PANVAC, you run the risk of getting all sorts of diseases from animals.
Smart 24, driving business. Well, heading straight into the matters to do with food security, let's take a look at, of course, 8 countries which united to convene, that is in Uganda, to address the food shortages. Now, across the African continent, food shortages have reached crisis levels in many regions, creating an urgent need for coordinated efforts to ensure that people have actually access to adequate nutrition, acknowledging the complexity of the problem. Now, the Food and Agriculture Organization organized a summit in Uganda, of course, uniting about 8 countries from Eastern and Southern Africa to address the underlying causes of food insecurity. Now, according to the Food and the FAO's latest statistics, over 280 million people, that is across the continent, are food insecure, with 55% of the figure concentrated in East and Southern Africa. Now, in some of the most affected countries include South Sudan and Somalia, over half the population faces acute food insecurity. Now, the World Bank estimates that climate change alone could actually push up to 86 million Africans to poverty by 2030, directly impacting talking about agricultural output, which is the backbone of many African economies. Now, South Sudan is among the hardest hit. Years of conflict have left nearly 60% of its population relying on food aid. Now, many farming families have been displaced multiple times, with agriculture infrastructure devastated by the conflict. Now, South Sudanese farmers, such as those in the Upper Nile and Equatorial regions, have actually had little opportunity to cultivate their fields due to security concerns. Now, the devastation has taken a heavy toll on food production, of course, leaving millions dependent on food imports or emergency aid that only intermittently reaches them due to logistical challenges and the ongoing violence. Now, agriculture employs around 60% of the African workforce and generates nearly 25% of the continent's GDP. However, the increasing impacts of climate change, such as erratic rainfall, prolonged droughts, and desertification, have severely affected agriculture productivity. Now, according to a study by the International Food Research Policy Institute, countries in sub-Saharan Africa face yield reductions of up to 30% by 2050 if climate resilience strategies aren't urgently implemented. Now, during the summit, Meshach Malo, the FAO South Sudan, highlighted conflict as a critical barrier, that is to food security. He said that peace is fundamental for food security. Until we see peace in South Sudan, agriculture will continue to struggle. Malo explained in his view, countries in conflict cannot develop sustainable agricultural practices, and the cycle of food dependency will definitely persist. Now, Malo's call for peace was echoed by the delegates who discussed the need for regional collaboration to bring political stability to food secure regions. Now, Ethiopia's agriculture strategy has shown promising results, of course, emphasizing resiliency through sustainable practices and community engagement, because we see that over the last decade, the Ethiopian government has focused on promoting climate-smart agriculture. Now, programs that incentivize farmers to adapt conservation tillage, use what we call drought seed varieties, and implement crop rotation, which have led to a positive impact. Now, the Ethiopian farmers have actually, who have adopted these practices, are more likely to harvest full crops, even in years to low rainfall. A good example, let's take a look at the Tigray region, where soil and drought are particularly severe. the Sustainable Land Management Program has helped restore over 30,000 hectares of land. Now, farmers who once struggled with low yields due to poor soil health now report yield increases of up to 50%. Now, this program has not only improved food security but also reduced poverty rates that is within the region. In Uganda, let's take a look. Let's take an example. Innovative agriculture techniques have empowered smallholder farmers to adapt to the changing climate. Now, one example is the National Agriculture Research Organization program, of course, which provides farmers with the climate-resilient varieties that withstand both droughts and floods. Now, this approach has had transformative impacts, particularly to rural areas where crop failure rates have dropped by nearly 40% over the last 5 years. Now, Uganda's emphasis on agro-technology has also created opportunities for young entrepreneurs. This is a growing number of Ugandan startups leveraging on technology to offer solutions that is to the farmers, such as mobile applications that provide real-time weather forecasts, market prices, and farming tips. Now, by equipping farmers with data, Uganda has empowered them to make informed decisions that maximize productivity and minimize the losses. Now, while the statistics surrounding the food security are sobering, of course, let's take a look at the human stories that are behind these numbers are even more compelling. Let's take a look at South Sudan. Children in the most food insecure regions face malnutrition rates as high as 20%, with long-term impacts and cognitive and physical development. Now, families often have to make the impossible choice, that is between buying food and meeting other basic needs. For international food aid, but supplies are often delayed due to logistical challenges in conflict zones. Now, in Ethiopia, women and girls are disproportionately affected by the food scarcity. Cultural practices are often mean that men eat fast, leaving women and children with fewer portions, and of course contributing to higher malnutrition rates, among other groups. However, we know that community-driven programs aimed at empowering female farmers have actually started to bridge these gaps, increasing household incomes and ensuring more equitable food distribution that is within the families. Now, during the summit, the importance of sharing resources, information, and expertise that is across borders was a major focus. Now, representatives discussed creating a knowledge exchange platform where countries could actually learn from each other's successes and failures. Now, they also emphasized the need to form regional trade agreements that would actually facilitate the movement of food supplies across the borders in times of need. Now, this would particularly be benefiting during harvest seasons, allowing countries to offset shortages through imports from neighboring nations with surplus crops. Now, a notable part of the conference was the knowledge sharing exhibition that actually showcased various technological and agricultural advancements each country had developed. For instance, Kenya conserves water while producing high yields. Somalia showcased a new irrigation technique adapted to its landscape, to its arid landscape, which actually provided a production of nearly 60%. So that is a part of the broader vision. Now, the Food and Agriculture Organization's vision for Africa is not just to alleviate immediate food shortages, but to create a self-sufficient continent where agriculture thrives in harmony with the environment. Now, to this end, the Food Agriculture Organization plans to increase its investment in research for climate-resilient crops, as well as in agriculture technology that helps smallholder farmers adapt to diverse conditions. Now, by 2030, the Food Agriculture Organization aims to see a 50% reduction of Africa's dependence on food imports, which currently account for about $35 billion annually. And well, exactly 20 minutes to the top of the hour. And that brings us to the end of today's Smart Means Business Edition. And thanks for being part of this edition. Still, many thanks from all the way, that is from the morning call to this particular time. As I'm saying goodbye, it's a fresh week. It's a Monday morning. Time to go back and strategize and see how best we can attack the week for the better. Till tomorrow, and a very prosperous week.